Starbucks CEO is out after a year and a half of underperformance. Starbee's CEO, Laxman Narasimhan, stepped down after just 16 months on the job. I'll break down what went wrong and get your reaction to all this. I know you have some strong feelings on it. Freeberg as well. Earlier this week, Starbucks shares were down 20% year to date compared to the S&P, up 12%. Company saw 2 straight quarters of declining revenue, the definition of a recession, in fact. They've had to raise prices massively due to inflation that has annoyed customers, and customers have been irate about the wait, which has been caused by 2 things. One, they have a broken staffing algorithm. That's led to massive understaffing. And then the app has become, the Starbucks app is incredibly complex, and you can order ridiculous drinks. That's causing a massive...
Why do you keep saying Starbucks?
It's what the kids call it. Starbucks.
Oh, that's part of the problem. Okay.
Kids are addicted to this.
That's what kids are addicted to it.
Yeah, and they've added like all these like fruity drinks and stuff that would be like along the boba lines that have become incredibly popular with millennials and Gen Z. So anyway, Laxman was the handpicked successor by Howard Schultz, and Schultz helped prep and train Laxman, but he's been super critical of him recently, kind of like the Bob Iger, Bob Chapek relationship we saw play out in 2022 over at Disney. Brian Niccol, the current CEO of Chipotle, is going to take over at the end of August. Investors love this move. Shares jumped 25% on Tuesday.
What did you call it? It's called Chipotle. Normal people call it Chipotle.
Brian Niccol, the current CEO of Chipotle. Chipotle?
No.
Chipotle.
CEO of Chipotle.
No, Chipotle.
Chipotle?
CEO of Chipotle.
Who knows? I don't eat at this place. Anyway, Starbucks jumped 25% on Tuesday, largest single day increase, yada, yada. Meanwhile, Chipotle dropped 8%. Niccol is on a heater. When he switches teams, the odds go with him. And Starbucks has a bunch of activist investors who are winning massively as part of putting pressure on this Freeberg. Starbucks and Nike, both iconic global brands, both have faltered. What's your take?
Well, the one argument is there's a founder-led problem here, which is when the founder steps out and professional management takes over and you have the same expectations that you had when the founder was leading, things go sideways. But Starbucks faces many more kind of macroeconomic challenges. Nick, if you pull up Starbucks financial report, so here you can see that their net revenue growth was only 1% year over year, but their operating margin's been on the decline. So they have not really been able to boost their operating margin very much in the past 5 years. So while they've raised prices, they've had a really hard time making more money. And that's because the cost of food and the cost of labor and the cost of rent and the capital expenditures needed to upgrade stores has far exceeded the ability for them to grow revenue and compete. And now revenue is flatlining because consumers are getting tapped out with respect to how much they can spend. And there's only so much innovation you can really do to charge more, get people to come in the store more, and drive up revenue. Brian Niccol has an incredible reputation. Prior to Chipotle, he ran Taco Bell. And he ran Taco Bell for several years and made it one of the most profitable QSR, quick serve restaurants in the world. He did this by focusing on every nickel. He is notorious for being a cost cutter, for being an efficiency driver, for being a productivity hound. He goes into the business and he figures out every step in the supply chain, every step of the operating activities of the employees in the stores, and figures out ways to make sure.
Did you say that Brian Niccol focuses on every nickel? Was that?
He did say that. I didn't want to say it. He did say it.
He did say, don't interrupt him. He doesn't like to be interrupted.
No, it's good.
Okay, sorry, keep going.
That was good. And so he was recruited heavily. I don't know if you guys remember, Chipotle's founder was running Chipotle. And at the time, there was a lot of investor activism around Chipotle because they were wasting money like no one's business. The guy had a private jet. He was flying his management team back and forth between Denver and New York. They were spending money on crazy projects. And the board fired the CEO, founder of Chipotle, brought in Niccol. Niccol came in and made Chipotle an incredibly profitable, growing business. And the expectation is he'll come in and do the same here, that maybe over the years, Starbucks' success has bred laziness. Starbucks' success has bred fat, slowness, productivity decline, and that this guy is the right guy to come in and find all the nickels. And Brian Niccol is probably the right guy, which is why you're seeing the stock kind of rally as hard as it has.
Sachs or Chamath, anybody have strong feelings here?
Yeah, I would just add something here, which is I do think that macroeconomic forces played a huge role here. We've seen that we have had a tremendous amount of inflation over the last few years, and Starbucks has gotten more expensive. And if you're a worker whose wages have not kept up with inflation, do you really want to spend 10, 15 bucks on a cup of coffee that, I mean, it's a pretty fancy cup of coffee. I'm not saying it's not, but when you could just go to your commissary at work and pour yourself a cup of coffee for free, do you really want to work roughly an hour every day to pay for your coffee fix? And I think more and more consumers are just saying that this is a luxury good. I'm looking to cut costs. When I go to the grocery store and buy groceries, they're 30% more expensive than they were a few years ago. I got to cut somewhere. And a luxury cup of coffee just seems like a really easy place to cut. So I think that's a huge part of this. And I don't know how Brian Niccol is going to fix that. It's a macroeconomic force.
Chamath, your thoughts?
I have a couple. The first is that I think Starbucks is actually an incredible brand. And it's actually a really good business. And the mistakes here have nothing to do with the product per se, meaning Chipotle, if you remember, someone got poisoned there. There was like botulism, the chicken was bad. So there was a core product problem. But that's not the case here. If you unpack what Starbucks is, I think that they are a premium product. And that's reinforced by what Sachs said, which is they price in such a way because they believe that they are a premium product. The problem is they are not a premium brand. And the difference is Hermes, as an example, is a premium brand. They can charge whatever they want under all weather conditions. They have pricing power. So if their inputs go up, they can make sure they maintain margin by changing the final price that the customer paid. Starbucks doesn't have that power. So they charge like a premium product, but they're not a premium brand that has pricing power. And that's why you've seen this compression. So very specifically, when the new CEO came in, he, I think, made one important mistake, which is he came in on the heels of a very rosy set of projections that Howard Schultz and the board put out to the street. And I think that he had an opportunity then and there to just cut it because they saw inflation, they saw what it was doing. And if you just looked around the corner, you would have seen that there would have been this compression in the product. And I think what he should have done is just cut the analyst projections and the forecast to give him room and time. He didn't do that. And by the way, when you bring in somebody who ran Taco Bell, that is proving that this is neither a premium product nor a premium brand anymore. It is a mass market product that will ebb and flow cyclically with the vicissitudes of inflation. That doesn't mean it's a bad business. I'm just saying it's just an observation. I expect that Brian Niccol, if he is smart, will look at this forecast and shred it to give himself time. So that's the sort of the short-term thing. The long-term thing, though, is in the following image, which I just sent to Nick. I think there's a real question mark on this company over the medium to long term. And I think it's best represented in this graphic. Starbucks is a sugar company. So, for example, a caramel macchiato, 32 grams of sugar. A mocha frappuccino, 60 grams of sugar. This is 3 times what you're supposed to have as a human in a day. A frappuccino, 53 grams of sugar. A caramel ribbon crunch frappuccino, 62 grams of sugar. And these products also average 400 to 500 calories per drink. So the real issue is that more consumers, as they question the repercussions of consuming a lot of sugar, what will they do? As more consumers get on GLP-1s, what will they do? As more people think about the fact that fat was never an enemy. In fact, fats are actually really good for you. The problem was that the sugar lobby convinced us that fat was bad and sugar was okay. What will consumers do? And I think that's a really big strategic question mark because the company has to embrace where the world is going. The world is going away from sugar. And I think as consumers become smarter, they're going to have to really figure out what to do.
Could Starbucks introduce a line of low-calorie drinks that use sugar substitutes to achieve the same
They've done
flavor?
it, but
they've already got that, yeah. When you open the app, they have every single syrup comes in sugar-free and regular. So when I go there, now that I'm on GLPs and I've lost all this weight and I drink less, I just get the nitro cold brew. It's got 0 calories or 5 calories. I might throw a little cold foam on it. And then my kids,
That's not what the kids want. That's not what the kids want.
And with the kids is critical. What I do with my kids is I do low sweet or like 1/3 sweet. I order one giant one. I pour it into 3 glasses at home with ice and I cut it with water because it is like drinking an unbelievable amount of sugar. It is nuts. And
It's
they
like a
have.
milkshake,
I'm gonna
basically.
go get an espresso after this. This is
No, I
making
mean,
me
that's the
want
thing
an
about coffee.
espresso.
Coffee's supposed to have 0 calories, and you put a little half in it, and you get the fat, and
No,
you're good.
but I mean, here's what happened. The thing about Starbucks, I studied Starbucks, and I've spent some time with Howard Schultz actually.
Well, you did retail,
ago.
right? Maybe you could talk about your eats.
I did a little retail.
You did a little retail side quest.
But the thing about Starbucks is they realized early on that when you can customize a consumer experience, the consumer comes back more frequently. So when you see your name written on that cup, you feel like you're getting your product. You're not buying an off-the-shelf product. You're getting a custom personalized experience. What that led to is people customizing their drinks. And what did they find that they liked when they customized their drinks? Sugary sweet add-ons. And then that became more and more of the standard menu. And then that just kept evolving. And that's just the consumer feedback mechanism working, which is, to Chamath's point, led to 60-gram sugar drinks that are now the standard product at Starbucks, not an espresso or a cappuccino, which is how they started. And it's really unfortunate. I don't think that Brian Nichols is going to focus on that, to be honest, given his background with Taco Bell and Chipotle, that was never anything.
And to your point, he'll be able to plug the leaks. My question is just more, what does a company that's selling a product that people are learning is worse and worse for them? What do? They have to embrace a different alternative, but I think it can be very hard because it may be so disruptive to the core product that they sell.
Yeah. J-Cal, what do you think?
You know.
I mean, what do you think about Starbucks?
Well, I mean,
this guy.
My kids love Starbucks. We are regular consumers. The app is extraordinary. And I think the key issue here, is obviously the inputs and inflation. That's a major driver. But wage inflation is a critical piece of this. Here's a chart for you, just in terms of weekly earnings of full-time workers since Q4 2019. Starbucks started having a lot of labor movements, a lot of unionization, a lot of complaints from the Green Aprons, and they have massively raised salaries. They were at, $15, $16, $17. A lot of people were going into gig work, door dashing, Uber. And so this competition for entry rung employees forced Starbucks, and I know this from the Uber experience and then DoorDash, people wanted to set their own schedules, not be like in a shift work. And so you could make $20 working for Uber and DoorDash. You're making 15 and you have to drag your ass into Starbucks at 5, 6, 7 a.m. and work a shift and not be able to pick up your kids. That led them to go to like $20, $22 per hour for these baristas. And they continued to raise those rates. They've been very generous with employees. And so I think that's a key piece of it. I think the big story here is going to be automation. I think you're going to see a lot more robotics in these. If you look at, I just had the CEO of, what's the salad company that people, Sweetgreens. Yeah. I just had the CEO of Sweetgreens on This Week in Startups, and he is all in on automation, and they are making salad robots, and they've already got 2 or 3 stores with them. And his whole concept is it's going to take $3 out of every salad. We have an investment in a company called Cafe X. Nick, you can play a clip of it. These 2 machines in FSO have broke $1 million a year in revenue. They are serving a massive number of them, and they've sold a dozen of these to other people. So I think automation is what's going to come to this. I don't think you can sustain it, and the money has to come out of somewhere. And the 2 big costs it can come out of is the real estate and the employees. And I think that's we're going to see in the very near future is Dunkin'.
I will predict. Yeah. No,
you were doing it at Eatsa, right? Were you doing?
Yeah, we had automation. I actually worked on an automation project with Jonathan at Sweetgreen and Starbucks and Chipotle.
Oh, you did?
So I knew them all. Yeah. And then the Chipotle CEO got fired. We were going to roll out automation with Chipotle, and he got fired, and Nickel came in, and our deal blew up. It killed the deal. So
explain how that might work and impact a business like that. Unpack it for a second.
Oh my God. So it was going to take out, basically these businesses today are running at, call it 30% EBITDA margins at peak performance. That's like Chipotle's best class. By taking out labor, you could probably take out another 20 points of cost, which could translate into lower prices for consumers, higher throughput, lower wait times, all of these kind of experiential differentiators are going to be significant. Certainly true for Starbucks, certainly true for Sweetgreen. I would expect that with Nickel coming in, you'll see some experimental stores, as you point out, JCal, that'll be more highly automated. But we'll also, I think one of the first things you're going to see from Nickel within the first year at Starbucks is a reduction in the complexity of the menu. This is something he's done historically. And he focuses, like he did at Taco Bell, he creates a couple of key highlight products and creates these innovative product ideas. And then those become the banners that bring people into the store. But it's a simpler menu with kind of more attractive, interesting products that bring people in. And then if you couple automation to reduce some of the cost, you can bring that labor cost down. So
yeah, and this is a key point. The order complexity is what's killing the baristas
there's 4 quintillion ordering options at Starbucks today. And so the expectation has always been that is what brings people coming back to the store. But what Nickel has shown in the past with Chipotle and with Taco Bell is you can actually have a simpler menu with a few points of customization. You don't need to have infinite customization around everything. And
which is what Steve Jobs did, right? With his 4 quadrants when he took back over. He was like, listen, what's business, what's consumer, what's high-end, what's low, what's portable, what's desktop. I forgot what the 4 quadrants were, but he did it. And if you look, Freeberg, to your point of the cost savings, right now, the majority of orders in Starbucks, I believe, are coming in through the app. And what I was told, in some of the buzz I heard from baristas was that they are prioritizing mobile orders to punish the people online to get them to download the app because that gets rid of cashiers. And McDonald's has no cashiers in a lot of restaurants right now. You just order at a giant touchscreen. So the cashiers will be gone, the cooks will be gone, and eventually the baristas will be gone, and it'll just be a couple of people.
The cashier problem also creates a wait time problem because it's a serial ordering process. Everyone stands in line, they order one at a time, and there's only one. And so the barista is just taking.
All of these are really good points. I just think that the CEO would not have gotten fired had he just moved the forecast down by 20%.